Inspirational and motivational here at Love House. Get a better mindset and set your goals here at Love House. Educational things you need to know here at Love House. Like credit, home, buying loans, and much more here at Love House. The space for
everybody. Welcome to the Home Buyers Clubhouse, where we go live every Wednesday and every Friday. On Wednesdays, we drop something inspirational and motivational, and on Fridays, we drop something educational. For those of you who don't know me, my name is Jessie Lynn. I am a triangle realtor with A to Z Realty. Miss Erica Batts, honey, introduce yourself.
Hey, I am Erica Batts. I'm your home loan chick, and I am so happy that it is Friday.
Woo! Me too. This has been a week. I found out last week my daughter was going to school this week, or was a week before last. I found that out. So I've been running around trying to get everything ready. So I am so happy it's Friday, Erica. I really am.
You know, I think July just really flew past so quickly for most of us. And now here it is August. We are on our, the third quarter of the year. So just about. So it's about that time. And, all the goals and things that we had, I don't know. It just seems like everything is just really flying past.
Absolutely. Look, I'm super excited about today's topic, y'all. Today, I am the buyer, Erica, and you are the lender. And so we are going to talk about what to do when speaking with the lender about loan options for purchasing a property. Like, it's so essential to gather all the necessary information to make an informed decision. And here are some important questions that we want to ask. So, Erica, I hope you're ready. I hope you are prepared, honey, because
I'm on the hot seat today.
I'm bringing the questions, so be ready.
Give me what you got. And y'all, I have not heard these questions in advance. This is just, this is the same way that I would answer these questions for you. So, all right, give me what you got.
Erica said, I'm going to have to phone a friend. You know what? Unfortunately, this is how we're supposed to answer. Unfortunately, I don't know the answer to that. But let me take a further look into it, and I'll get back with you. There we go.
Let me research, and I'll get back to you. But let me see. I'm ready. What you got?
All right, let's go. So, Erica, Miss Lender, what types of mortgage loans do you offer?
Well, we offer conventional mortgages, and that's going to be your standard either 3 or 5% as far as your down payment. We also offer government loans, which are your FHA, your USDA, your VA. And then we also have some what we call non-QM options. So those are going to be the non-traditional. Those are going to be things like your DSCR. That's for an investment property. Those are going to be things like your I-10 loan. So if you don't have a social security number, but you do still want to buy a house, that is something that we can accommodate as well. We have a lot of different options. So it all depends on what's going to work for you.
Awesome, Mrs. Lender. Okay. So you guys, look, these questions right here, asking your lender these questions, they will help you understand like a range of loan options available from the lender, right? So that includes what she said, FHA, VA, conventional, and any type of specialized loan programs. All right. So let's move on to question number 2. So, Mrs. Lender, what are your current interest rates for each loan type?
So interest rates are going to vary based on your situation. So that's not really a question that you can answer just on a general basis because it's specific for every individual person. So each loan type is going to have a different interest rate depending on your credit score, depending on your down payment options, all of those things, your debt to income ratio, all of those things play a part in how much your interest rate will be.
Awesome, awesome. And you guys, knowing the interest rates, this will help you compare the cost of borrowing across different loan options. So that's why it's very important. Go, Erica.
One thing I will say about a lot of people get caught up on the interest rate before they find a property. And when you're
Mhm.
comparing different lenders, the first step would be to do your applications with, all the different lenders that you want to select. Do all of those at the same time, but don't get caught up on the interest rate, because the interest rate doesn't matter until you actually find a property. Because I can quote you a 5% interest rate today, but in 3 days, when you get ready to purchase this house, that interest rate may have changed. So whereas I may not be the lowest today, I may be the lowest in 2 or 3 days. So interest rate is not something that you really want to get caught up on when you're beginning the process.
Absolutely. Question number 3, Mrs. Loan Officer. What are the down payment requirements for each loan type?
So they are going to be VA and USDA are both 0% down payment. Those are both, you have to qualify for the VA loan. Now, if the VA loan, you have to be a service member, or you have to be the surviving spouse of a service member in certain situations. Your USDA, that is going to be location specific. A lot of times those are going to be in rural areas. You also have to meet income requirements for the 0% down. Your FHA is going to be 3.5% down is the minimum payment there. And your conventional has a couple of options. There are some 3% down options, but then primarily it's 5% down for conventional.
Awesome, you guys. And knowing this and understanding your down payment requirements, this will allow you to assess which loan options aligns best with your available funds. Because you may have 11,000, you may have 20,000, you may have 0,000. So it's good to know.
But now sometimes I will say a lot of times clients get caught up in trying to figure out the loan type, and when that's our job. As far as we need to look and see what your situation is, and then we can talk about the different loan types that you would qualify for. Because I think a lot of people get caught up with the analysis paralysis because they're thinking about, oh, I want an FHA loan. When we really sit down and look at it, a conventional loan may be the best option for you.
Absolutely. Question number 4. What are the credit score requirements for each loan type? As much as we talk about this, we get this question like so much, but go on.
We do. Well, credit score requirements are, again, going to be different for each loan type. So your conventional is generally going to be a 620, and these are going to be your FICO scores, and this is we call it a tri-merge. So we look at all 3 credit bureaus, and whichever FICO score is in the middle will be the one that we use. Then you have your FHA. Your FHA, the lowest score that you can get is a 500, but now you do have to put a larger down payment. So you have to put a 10% down payment if your score is between 500 and 579. Most of your programs is going to be 580. Now they do also have an option where you can, if you have no credit score, you can do an FHA loan. So, but there's some additional qualifications with that. Your VA technically has no score, but you have to, the automated approval system has to approve that. So it's generally harder to see if we can, if it's less than 500, that's been a little bit harder. So generally we like to see at least 580. And the USDA is 580 as well.
And look, you guys, knowing the credit score requirements, this will help you get a better gauge on your eligibility for different loan types based on your credit history. But what, Erica?
But you have to do the application, and so that we can see exactly what works for you.
Absolutely. All right. So, Mrs. Loan Officer, what are the closing costs associated with each loan type?
Closing costs are going to be, for most loans, it's going to be really similar. There have been some where I've seen where it's been 3%, and some that I've seen it's been 5%. The only kind of variance to that is what I found has been the VA loan, because it's a VA loan, they can't charge all of the same fees that a regular loan would charge. So usually that one is just going to be a little bit lower.
Awesome, you guys. And your closing costs includes fees like your appraisal, your title insurance, loan origination charges, and understanding these costs, they will help you plan your budget accordingly, because that stuff can add up in the end. All right. Number 6, Erica, is PMI, which is private mortgage insurance, required? And if so, how much?
It is required on certain loan types. So if you're putting down less than 20% on a conventional loan, then it is required until you get to 78% of the loan value. Once you get to 78% of LTV, then for most loan types, it automatically drops off. On FHA loans, it's required as well. And so if you're putting down less than 10%, then it is required for the life of the loan. They have decreased the private mortgage insurance this year. So now it's not quite as much. So for some people, that's still a viable option.
Okay. And for you guys who don't know, PMI is typically required for conventional loans with a down payment less than 20%. So understanding the PMI cost is crucial for assessing the overall loan affordability.
Right. And VA and USDA, neither one of those have PMI.
There you go. So what is the long-term options? What are the long-term options? So 15-year, 30-year, what are the long-term options?
So you have 10 years, you have 15 years, you have 20 years, you have 30 years. You usually get your best interest rates on a 15 or 30. Now, those are all fixed rate. There are adjustable rate mortgages out there. A lot of those they will start at one rate for 5 years, and then those rates will increase after that.
Okay, you guys, and knowing your loan term affects the monthly payments and total interest paid over the life of the loan. Okay. So number 8, are there any prepayment penalties for early repayment of the loan?
You have to see which loan. So that's all going to be explained in your loan paperwork. For most loans, there are not, but there are still some loans out there that do have prepayment penalties, especially if you are doing an investment property. I haven't seen too many here lately with prepayment penalties for a primary residence.
Awesome, you guys. And prepayment penalties can significantly impact your ability to refinance or pay off the loan ahead of schedule. So question number 9, can you provide a loan estimate, which is an LE, or a good faith estimate, which is a GFE, for each loan type?
Yes.
That's a lot of work.
You can get those. It is, but yes, you can get those, which is why I tell people to do the application, because you want to see exactly what applies to you in your situation. And so if I can qualify you for $300,000, you want to know what all your appropriate costs are going to be for that $300,000 loan.
So if I ask you that, and I'm pre-approved for all of the loan types, and you say no, Erica, no, I'm not doing that.
I would say I normally try to narrow it down to like two different loan types, because just because you may qualify for all of those loan types, you're not going to get a USDA loan if you want to live in Raleigh. So that's not something that's going to happen. So, and then you may not qualify for a VA loan, because unless you're a veteran, you don't qualify for that. So that leaves your, that's really just going to leave your FHA and your conventional.
So, and for the people who don't understand what a LE is, which is a loan estimate, or a good faith estimate, these documents, they outline the estimated costs and the terms associated with each loan, making it easier to compare and choose the best option. So this is why it's kind of important to shop around as well. All right.
And I would definitely say look at your fees on those sheets, because a lot of people just get caught up on the interest rate And I've seen ones where, yes, they give you an interest rate that's 0.5% lower. However, they're charging you an extra $10,000 in fees for that.
Wow. Wow, 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 wow. All right, you guys. Question number 10 is, Erica, what documentation is required for the loan application?
Your loan application, usually what we're going to be looking for is we need 30 days worth of paycheck stubs. We need 2 months worth of bank statements. We need your driver's license. And we need, let's see, your bank statements, paycheck stubs, your W-2s, your last 2 years of W-2s. And generally that's it. And then so if your bank statements don't have the amount of money in it that you're going to need for your down payment, then we would need any source of funds for that. Like if you have that in your 401k and that's what you're going to be using for your down payment, then we would need that statement as well.
All right. And you guys, knowing the necessary documents in advance, this will help you expedite the loan process. So that's 1000% why that question is important. So moving on to question 11, what is the estimated timeline for loan approval and closing?
An approval is usually like your initial approval is usually happening within 24 to 48 hours of the time you do an application. Once you find a property, we can close you anywhere between, now I have done one in 14 days, but most of the time you want to give anywhere from 20 to 30 days in order for a loan closing to happen.
See, you guys, some lenders require about 45 days to close. So when we ask as a real estate agent, because we do ask this question, and we know sometimes it takes about 45 days, especially, doing due diligence and all of that. But sometimes it's good to know, especially if you need to move quickly, your lease is ending very soon. Because with us, we're going to say, well, it's probably about 45 days. Some lenders can do about 30. But did you know you had lenders out there that can close in 20, 14 days? Some lenders 10 days. So yeah. So ask. This is why you ask these questions.
I will also say if you're using a down payment assistance program, a lot of down payment assistance programs do take 45 days.
Absolutely. All right. So, where are we? Timeline. Okay. So we were on the timeline. All right. We're on question number 12. Are there any special incentives or programs available for first-time home buyers or specific professions like teachers, healthcare professionals, etc.?
There are certain groups, so just like medical professionals, so they have what we call a doctor loan. So that's actually a 0% down payment loan. Because they know you're in school, you may not have a whole lot, those type of things. So if you are that type of medical professional, that's a program that you can do. There are also programs called like Teacher Next Door, things like that. So different communities have different programs that may be available. First-time home buyers, a lot of people get kind of caught up on that term. And there are some programs that do require that you be a first-time home buyer in order to be able to utilize those. Like some of the 3% down products, you have to be a first-time home buyer to be able to utilize those, or your income has to fall within a certain range.
I lost sound.
Okay, you froze for a second.
Yeah, I lost you.
Okay, so I don't know how much of my answer that you heard.
out.
Can you hear me now? Hello, hello?
I can't hear
Audience,
you.
can y'all hear me?
I can't hear you.
Now my sound is, I can still hear myself and I can hear you. So I don't know what happened.
I'm gonna make sure it's not me, but yeah, you went out.
Okay.
Say something now.
I can hear you.
Okay, so it was my sound. Oh wow. That's crazy. Okay, let's go. All right, let me go back. Do you hear echo or anything?
No.
Okay, good. All right. Okay, what is an estimated time? Incentives. All right, so we are on
I think we should be on question 13.
Yeah, we are. I have you connected to my computer. Hold on. I don't like it. My sound is coming in very slow. Hold on.
And audience, if y'all have any questions, y'all can drop them in the box.
All
I'll be
right.
happy
I
to
connected
answer
you to my
those.
laptop. Say something.
Hello, hello.
All right. I'm just going to have to deal with my echo. All right. So, question number 13. What is the process for locking in an interest rate?
Usually that's a conversation that you would then have with your lender. I usually do it proactively with my clients. I'll, let them know. So as soon as I get a contract in, I'm looking to lock that rate on that day. So unless it's something happening in the news where interest rates have risen that day for some odd reason, and if I think they're going to go back down, then that's a conversation that I will have with my client, and we lock that rate in as soon as possible.
Awesome. And you guys locking in the interest rate ensures. Bear with me. I can't deal with my echo. Okay.
Well, locking in the interest rate, what that does is that basically guarantees that's the rate that you're going to get, because that's why I said getting the interest rate information early doesn't really help you, because that's not the rate that applies to you until you actually lock that rate in. Then that's the rate you're going to have for the next 30, 45 days, that type of thing.
Absolutely. Number 14, can you explain any potential risk or downsides associated with any loan type?
It really just kind of depends. It depends on what's going to work for you. Like if you're doing an adjustable rate mortgage, you need to be prepared for that rate increase. I also usually try to talk to people about things like your property taxes and your insurance. That's something that you need to stay on top of, because that can cause your house payment to increase a year from now. And so even though, that's a whole year from now, I want you to be as prepared as possible to be a homeowner, because there's a lot of times people are not prepared for those increases, and then you can't navigate those.
And you guys understanding the potential risk, this potential risk, it'll help you guys be well informed. It'll help you guys make a well informed decision. So question number 15, how will you communicate with me, Erica, during the loan process?
So usually for me, I talk to my clients throughout the process. And so it's either by phone, email, whatever is going to work for you. Whatever we establish at the beginning is better for you, then that's how I'll communicate with you. And that's usually at least once a week, if not more. So as things come up, then I'm going to go ahead and call you and say, hey, this is happening, because I don't want you to be not informed and to be questioning, okay, I'm not sure what's going on here.
Absolutely. So this right here, this will help you establish clear communication channels with the lender to stay updated on the loan progress. All right, you guys. So also remember, when asking these questions, asking these questions will not only help you understand the loan options, it'll help you better also demonstrate to your lender that you are knowledgeable and a responsible borrower. So take your time to review the information and compare different lenders before making a final decision. But certainly understanding the different loan types and the different loan options available to home buyers is crucial when considering purchasing a property. So Erica, let's kind of go into it. We don't have much time, but let's kind of explore like your FHA, your VA, and your conventional mortgages in detail. So your FHA is what, Erica?
So that's going to be a 3.5% down option. It does have right now, that has a lower interest rate than most of the conventional options that I'm seeing. So even with a 20% down. So like I currently have a client with, she had the 20% down, but the FHA option was a better option for her because of the lower interest rate. And then she was able to put some of the additional funds that she was going to do on a conventional mortgage, and she bought down that rate even more. So when you look at it overall, this house is going to cost her less long term by using the FHA loan than the conventional that she originally wanted.
Absolutely. And FHA stands for Federal Housing Administration. And
Yes.
FHA mortgages are designed to assist first-time home buyers and those with lower credit scores or limited down payment capabilities. The key features of an FHA mortgage also includes what Erica said earlier, low down payments. One of the main attractions of FHA loan is the low down payment. Like Erica said, is around 3.5% of the purchase price. And this allows individuals who may not have saved for a large down payment to enter into the housing market. Accent I just grew. Easier credit qualifications. FHAs are more lenient when it comes to credit scores compared to the conventional mortgages. Borrowers with the credit score as low as a 580 may still qualify, though a higher score may lead to more favorable terms. Mortgage insurance. FHA loans require upfront mortgage insurance, a mortgage insurance premium. Erica, I do need you to go into that, and annual mortgage insurance, which protects the lender in case of default. The MIP can be financed into the loan.
Right. So your MIP is basically kind of the same version of a PMI. It's really the same thing. And so both of those, that's what they do, is they do protect the lender in the event. So that's why you're able to do a 3.5% down payment, because that does protect the lender in the event that you default on that mortgage.
And you guys, it also has, we're talking about FHA loans, they have a flexible DTI, which is a debt to income ratio.
So they have the highest debt to income ratio. You can actually, depending on the lender, you can go up to 56% for your debt to income ratio. So that's perfect for those people. If you've got a student loan, even though you're not paying that student loan and we still have to count it, then that's going to be perfect for those type of borrowers. If you have some additional debt that you have, then that's more house that you can qualify for.
Wow. You said 56?
That's correct.
Compared to what with other lenders?
Generally with, well, it depends on the lender, because there's some lenders, they only go as high as 50%. There's some lenders that only go to 45%. So all lenders are not created equal. And then also with your conventional usually is going to be about 45% is as high as you can go.
Awesome. So let's talk about VA before we close out. So VA mortgages, they are exclusively available to be to eligible veterans, active duty service members, and certain spouses. Erica mentioned that earlier. They are guaranteed by the U.S. Department of Veterans Affairs, and some key features include no down payment, which is awesome. VA offer loan. I can't even read no more. VA loans offer the benefits of requiring no down payment, making home ownership more accessible to the eligible military personnel. No mortgage insurance. Unlike FHA and some conventional loans, VA loans do not require a PMI, which also reduces the mortgage cost as well. Competitive interest rates. VA often comes with competitive interest rates, making them an attractive option for borrowers. Also offers flexible qualification standards. The VA takes into account the stability of income, credit history, and residual income, the amount left after paying major expenses when considering loan applications. Erica, you got anything you want to add about VA loans?
I will say VA loans, you also have to look at, they also consider like child support, like all of those different type of things. Other loan types do child support as well. So, you know, that if that's a bill that you are paying, but especially VA. So, but for most people, it is a really great option to get you into a property so that you don't have to do base housing.
And conventional loans, they may offer a higher down payment, 20% of the interest price sometimes. The private mortgage insurance, if the down payment is less than 20%. Credit score is very important. More property types. Conventional. I was like, what? More property types. Conventional loans are not limited to primary residences. They can be used for investment properties and second homes as well. Yeah, that's it. So make sure you guys choose the right loan type. You have FHA, VA, conventional, USDA, Erica.
Yes.
As well.
So I would I won't say make sure they choose the right loan type. Make sure you discuss with your lender, you know, the types, because you can pick a loan type, but that may not be the best option for you.
Exactly. And that's where that loan estimate comes in, Erica,
That's correct.
as well. So they could be pre-approved for all of them, but you definitely want to choose the best one. But listen to your lender. They can definitely guide you, get you on the right track. Anything else, Erica?
That is it.
All right, you guys. Lord have mercy. I just knew we were going to do good today. Thank you guys so much for tuning in today. For those of you guys who don't know me, my name is Jessie Lynn. I'm a Triangle Realtor with A to Z Realty. You can reach me at 919-818-9854. Erica.
Hey, my name is Erica Batts. I am your home loan chick. You can reach me at 919-608-7916, or you can reach me at ericabatts.com.
You guys, y'all can also reach us in the clubhouse at www.thehomebuyersclubhouse.com. You can also find us on Facebook in our group or on our page at Homebuyers Clubhouse. You can find us on YouTube at The Homebuyers Clubhouse. We hope you guys have an awesome day. We'll talk to you guys later. Bye-bye.